In this video, I'm going to be discussing the home office deduction. Is it a red flag for an audit? Do you qualify for it? What are the different methods out there that you can utilize? And about how much of a deduction can you expect to take from it? So for those of you who don't know who I am, my name is Navi Miraj. I'm a certified public accountant, and I specifically help real estate professionals, that's the real estate agent, realtor, or broker, save thousands of dollars in taxes. But this video also applies to you, I guess, regular business owners as well. If you watched my last video on the importance of tax planning, home office was one of the first items I spoke about under the maximizing deduction sections. If you missed that video, I'll try to link it up, or if you're watching this on YouTube, then it'll be in the description below. So let's just jump right into it. Is the home office deduction a red flag for an audit? And the answer to that is just simply no. That's a super old mentality. If you think about it, how many people in this day and age operate a business out of their home in 2020 versus, let's just say, 1990, which is, that's where some of that old school mentality has stuck in the system this whole time. The circumstances and the technology has all changed since then. So what do you have to do to meet, what guidelines you have to meet to qualify for the home office deduction? So let's chat about those for a second. The first qualifier might sound very obvious, but do you actually have a trade or business that you do, right? So some examples of that would be, do you own investment real estate property where you have a tenant and you're the landlord? That could qualify you as having a trade or business. Are you, like all of my clients, a real estate professional, like your realtor, broker, or real estate agent? Or maybe you're another business owner. Maybe you sell goods on Amazon, or you're a dentist or something like that. The second qualifier is, do you use the area regularly and exclusively for business? So those terms like regularly and exclusively, let's touch on those for a moment. So regularly means not incidentally or not occasionally. It basically means that consistently you use a portion of your home for small business. So let's call it a few hours per week, or Monday, Wednesday, Friday of each week, or it's consistently used for a business purpose, not seldomly used. Exclusively means that same area that you use for home office is not used for another purpose when not in use for business. So an example that comes to mind is like, you can't use your kitchen table for home office and then, put your laptop away, and then that same kitchen table is used to, have dinner. That would be an area where it has mixed use and it needs to be exclusive for business. The third qualifier is it your principal place of business? And the definition of this has changed over the years. So I want to say that it's okay to have multiple locations where you conduct business. And often my clients have office space in their brokerage office. They obviously are showing homes and different properties, but they do have their administrative and management activities at the home office. And that can be, shift things to make that your principal place of business. So for the realtors out there, writing up a listing, your market analysis, making cold calls, talking to people like myself about tax planning, all those things qualify as administrative or management type of activities that you're doing at home in your home office. So if who can't use the home office for a deduction, it's someone who obviously is not a business owner, doesn't have a trade or business, but also someone who doesn't pay rent or doesn't own a home and have expenses associated with that, because there's no expense that you incurred, so therefore you wouldn't get a write-off for it. So let's talk about the methods, right? I'm going to back up a second, and on the slide here I have, there are two methods: the simplified method and the regular method. The simplified method is pretty simple. It works like this. You get $5 a square foot up to 300 square foot that you use for your business, okay? So, most of my clients, the max situation would be, $1,500, right? You use up to 300 square foot is the max that they'll allow you to go using the simplified method, and $5 times 300 square foot is $1,500 max. I find that a lot of my clients go above what I'm about to say, but on average, 100 square foot, like a 10 by 10 room is probably what's really being used. So the simplified method in that example would only get you a $500 deduction, right? But let's talk about the regular method. The regular method allows you to take the business portion of your home and write off a bunch of different items. Some of them I couldn't even fit on the board here. So let's use that same example. So you have 100 square foot, like a 10 by 10 area, and let's just say your total square foot is 1,000. I know that's kind of on the low end, but that would mean that 10% of your mortgage interest, your mortgage insurance, your rent, if you're a renter, your renter's insurance, homeowner's insurance, HOA or condo dues, your real estate property taxes, utilities such as like electricity and water, a security system, and even an accounting word called depreciation. So the regular method, in my experience, is at least 3 times the deduction that you get if you use the simplified method. And sometimes this is thousands of dollars more if you use this method versus the simplified method. So quick note, I mentioned depreciation a moment ago. It's kind of an accounting term. There is something called depreciation recapture. Don't let that scare you, okay? What it really means is if you sell your home, the IRS, so first off, it doesn't even apply if you rent, but if you own your home and you sell that home, the IRS says you got to take all the depreciation expense that you've expensed over the years and pay that back when you sell the home. You don't have to pay all of it back. You take the amount that you depreciated and you multiply that by 25%, and that's the amount that you'd have to pay tax on. Before you freak out about it, don't worry about it. You're getting a tax break now of, I would say, at least 15%, if not 40%, and then using that money as you wish, pretty much for free until you sell your home, and that's even if you do sell your home. So it rarely harms you. I'm just bringing it up because I see a lot of videos not really talking about this in the home office deduction. So I just want you to be aware of it, that if you take the regular method, this does not apply to the simplified method. If you take the regular method, then depreciation expense is allowable, and know that when you go to sell your home, that depreciation recapture will exist, right? So I guess my question is to you, if your accountant isn't talking to you about the regular method, or even the simplified method for that matter, you've got to ask yourself why. Is it because it's more work on their end? I mean, yeah, it does cause us accountants to do a little bit more work, sometimes a little bit more bookkeeping throughout the year. But if the answer to that is yes, what else aren't they telling you about? I mean, this is one of the most simple tax deductions, and if they're not teaching you how to maximize this strategy, then they're certainly not teaching you about any of the other strategies, right? So, the purpose of all of my videos really is just, I want to make you aware of these things, these different deductions that you can take. They're not designed to show you the itty bitty, detailed information of how to actually implement the strategy. I would ask you to either consult with myself or your tax professional on how to exactly implement the strategy. Specifically, what I mean by that is if you're taxed as an S corporation, so you're an LLC taxed as an S corp, or maybe a C corporation taxed as an S corp, the way you implement the strategy and actually get the deductions a little bit different than if you were taxed as a sole proprietor. So with that said, if you got value out of this video, please do subscribe, because in the next video, I plan to discuss the auto deduction, and these two items sort of tie together. You're going to see how establishing an administrative home office plays a role in the auto deduction. And so sometimes I want to make sure that my clients, even if they really don't want to use the regular method for some reason, that they're at least doing simplified, because it plays a role in the auto deduction. So I just want to say thanks for all the great feedback. I really appreciate all the comments that you all have been leaving. Like I said, do subscribe, and I'll see you in the next video.